Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I've had a really bad cold over the last week plus. It's been about 10 days, so I haven't been writing much, but I did want to give an update tonight. Two of our positions are stopped out. And what this tells me is that when I start getting a lot of failed patterns and patterns that are large, that are failing, that it says that the trend could be reversing from up to down. I'm not ready to make a bearish call yet. I still think we may get a couple of days on the upside into the new year. But anyway, let's get into it. So this is a weekly chart. This goes back about 3 years of the S&P 500. This isn't a recommendation. I'm not making a call, but I pointed this out last time, and I want to show that it's still going on, where we have hit higher highs going back to March of last year, and we're getting lower highs on our relative strength index, and that's just saying that uh, the underlying demand is waning, and people are pulling out, whoever that is. And this was where I had done the last update, where we bounced off the top of the channel. And you can see with seasonality and all kinds of bullish potential, the market has been pretty soft here. It doesn't mean it can't rally for a few more days. But this is usually is followed by some sort of correction or the beginning of something larger. But just a couple of down weeks, down 2 or 3 weeks is not, you know, uh, wouldn't alleviate this kind of a negative divergence. But we don't have anything really to hang our hat on. On a daily chart, we have a potential head and shoulders pattern here that I'm not ready to talk about yet. So this is just to give you some flavor on a intermediate term chart, a 3-year chart. But as I've been doing this now a year. I can't believe it. And going back probably the last 10, 11 months, I've occasionally every 3 months or so, I've pointed out this long-term chart of the S&P 500 and the fact that we have a bearish divergence, all these higher highs going back to 2018. We've gotten lower highs on our RSI. So we've got like a massive negative divergence. And at some point that's going to matter. Does that mean now, the beginning of next year? I don't know that. I'm just cognizant of this when I weight my portfolio and try to strategically balance my portfolio. You can see back in 2000, we had about I don't know, a 3.5 year negative divergence, but we've got 7 year negative divergence currently. 2007, we only had like 11 months negative divergence. So this is really big. I just want to point it out. Um, you know, uh, I don't care which way the market goes. I just want to make money in it. So this is just big picture stuff. This is seasonality for the S&P 500, and here we are in December. Still should tick up into the new year, maybe into the first week of the new year, and then we should get some downward movement on based on seasonality, which is one factor in my toolbox. It's a tendency. It doesn't mean that things have to follow that pattern. But this is one of the reasons why short term, going back to December 20th, I suggested maybe we get a bounce for a couple of weeks. And the McClellan oscillator, which I highlighted the last time that we were really oversold, that a bounce was probably due. We did get a bounce, but it hasn't been very much. And we got right up to the zero line, and the this is upside versus downside volume and price. So this is this is also measuring internal strength, and it's showing that we failed to get above the zero line, and that's usually not a good omen. So anyway, we're starting to get oversold again, but that's kind of where we're at right now. So we broke our stop here on Mattel, MAT, and so we got stopped out at 1768. It's a gigantic pattern. A, B, C, D, E. We had all the necessary touches. Everything was textbook. Got a breakout on big volume, and it failed. One of many patterns that are starting to fail, and that is not a good omen for the market. And there's nothing more bearish than a bullish pattern that fails. So we're stopped out of that. Mattel is no longer. Take my loss and crawl under a table. Uh, Physical platinum, PPLT, stopped out at 82.66. Now, this is not a failed pattern. This is just where I'm putting my stop. I had identified a smaller inverse head and shoulders pattern here that we bought. It broke out. I suggested selling a lot of it. I said, sell it. This is, was up a lot right off the bat. And so that would make this a little bit easier to digest, but it's still not easy to digest. And so support's down here at about 80. And so, I wouldn't be surprised to see a test of that. So I'm not done with this yet, but I'm watching it, the point and figure chart, the X's and O's chart, lost its bullish trend line. So I'm just going to step away from this. A lot of times, if we are starting something major as a major bear market, everything else suffers too. I remember gold in 2007, it lost 15 to 20% of its value in 2008, just because when if stocks really start crumbling, traders sell whatever they got and they have to come up with margin calls. And this is a very leveraged market with people borrowing lots of money to buy more stocks. And so when they get margin calls, they got to sell things they really don't want to sell. But all that to say, we're stopped out. I'm still watching this. Microsoft. Actually, our original stop was 425. I've lowered that stop to about 419. I'm going to use today's low. If any stock's going to hold and show us the way, it would be a Microsoft, Nvidia, something like that. And so, again, this is not a huge pattern. It's a 6-month pattern, but we got all the necessary touches. And so I'm going to give it a little bit of leeway here. And but our new stop is 419. So we're still in this. Let's go to things that are still open. It's interesting. The key thing with keeping these stops and following your discipline and getting stopped out with small losses is because if we do get into some sort of a bear market, I'd rather only have 3 or 4 or 5 positions open than 10 or 12, where I really don't know where I'm going to get out of them. And so the whole idea here is to keep your losses at a minimum and let your winners, uh, run. So Shanghai Index, this was a call I made back early 2024, one of the first calls I made, suggesting that the end of the bear market for Shanghai Index in China was here, and we've gotten a good push up. I don't, the data looks horrible in China right now, but again, I'm not an economist. I'm not a fundamental guy. Who knows? Maybe China comes out with some huge stimulus tomorrow and the market takes off. I don't know, but I'm looking for us to get up to like 4250 eventually. But this is just showing you the actual Shanghai index. Of course, we don't buy that directly, so we buy the buy recommendation was on FXI, the iShares Large Cap ETF. So, here's the inverse head and shoulders pattern. Here's the breakout. Here's the retest. Again, every time we got big up weeks, I've said sell, 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 portions of your lock in some gains. And we got down here, back down by our stop. I'm saying buy, 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 buy. Add back some of your the stock that you sold at higher prices. Same with a couple of weeks ago, we got this big spike up, sell, 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 and now we're still kind of sitting around here. So still intact. My stop is at 29. Tencent Holdings. This is a big technology conglomerate in China. It's supposed to be a great company. I don't know a lot about it, but I did like the pattern, symmetrical triangle, A, B, C, D, E. Huge breakout. Again, we were selling as this stock was soaring upwards, and now I'm kind of reloading, and that's where we're at. We got to stop at 50. Big upside if it can get going here. Excelon. This was a recent buy recommendation. I think it was about 3 weeks ago. And again, I don't know, you could call this a descending triangle with a declining top and a flat bottom. And again, it's a big pattern. So, if it fails, it's kind of tells me, things aren't working right now, that this market is wants to turn down. So, Exxon, one of the more defensive stocks, a utility company. And again, we got huge potential. We got a big bullish hammer 2 weeks ago, and that's our stop at 36. And so we just got to see a breakout here above 38. We could maybe get this thing going because the price projection is 51, which is a huge upside. And we also got a big dividend on here. I want to say it's 4%. Copper, this is a messy one. Both copper and platinum on the last call were my last two positions I covered, saying I wouldn't be buying these aggressively. They're kind of within a bullish pattern. They haven't broken out of these patterns. And so, I said you probably see copper come down to around, four, maybe a little lower than that to test the support line here. And it's kind of just meandering there. So, again, I'm not an aggressive buyer here. Uh, and and so those are the positions that are left. We were stopped out of three the last update, and they're all lower. TLT, what else? The REIT index, and there was one other. But anyway, this is what we're left with right now, which is good. Buy treasury bills, they're paying 5%, with no risk. So anyway, right now that's where we're at. So thank you for watching Chart Built Wealth. Profitable investing with technical analysis. Please like and subscribe. Have a great night, and I will be in tune more often now that I'm feeling better. Thank you.